Hello everyone, how are you all? Hope you are all fine. And today we have come with a new video, that is one-stop solution for complete consignment accounts. That is 14 marks problem which is covered of the previous year 2019. I hope you all will be very enjoying this session. So without any delay, let us introduce myself. This is Yashoda Srinivas, your tutor. I'm doing this advanced financial accounting subject for BCom second semester, affiliated to Bangalore University. We are doing accounting for consignment. If you have not yet subscribed to the channel, please do subscribe and click the bell icon which is given below next to the subscribe button, so that you'll be getting regular notification of the classes whenever the video is uploaded. Please do like the session. It is a motivation for me to continue the classes, as well as please do share with your friends and whomever you feel they are needy of these classes. Please do share. This is the quote of the day: act as if what you do makes a difference. It does. Whenever you feel something is making a difference, please do act according to it. It does create a difference. Don't do different things, do things differently. Let us look into this problem. It is consigning 1500 batteries, that is Amco batteries is consigning 1500 batteries costing 5000 each. Okay, so to Manju Electricals of Mysore, he is the consignee. So consignor paid 75,000 as freight. The consignor has paid 75,000 as tax. Okay, so for transporting the goods from consignor to consignee, and 30,000 as insurance. So this insurance is pertaining to insurance in transit. Whenever they are transporting the goods, in between if there is any abnormality, that is if there is any anomaly, then that type of situations has been covered here, insurance in transit. So this is a non-recurring expense. It is a non-repetitive in nature. So during transit, it was found that 10 batteries were damaged. Okay, so 10 batteries were damaged in transit, means it is nothing but the abnormal loss. Whenever something happens in transit, you should assume that as abnormal loss, until and unless they have particularly mentioned it is normal. So insurance company settled the claim of 45,000. Upon that, they have claimed the insurance, as we know that they have insured the the commodities. So consignee receives the balance batteries and incurred 14,900 as unloading charges. This is a non-recurring expense of the consignee. Whenever he wants to unload the goods from the truck or the lorry or any logistics in which the consignor has sent the goods, that type of charges is nothing but unloading charges. This is a one-time expense which is not repetitive in nature. And he sold 800 batteries at 6,500 per unit for cash. So he has sold 800 batteries for 6,500 per cash transaction, and 450 batteries he has done, or he has made the sales on credit basis, that is 7,000 per unit. He spent 42,000 as godown rent. Okay, na? So he has spent 42,000 as godown rent. Since it is recurring in nature, it is called a recurring expenditure. 65,000 as advertisement, this is also recurring, and 30,000 as salesman salary. Every month he has to pay the salary, hence it is repetitive and recurring in nature. So consignee is entitled for 5% ordinary commission on sale. Whatever the sales he make, he is getting 5% as commission and 2% as del credere commission. Since this person has gone for credit transactions, what will happen if a credit transaction happens? Debtor will be there, debtor. So if that debtor doesn't repay back the money, then he will become a bad debt. Okay, bad debt. Okay, if that bad debt is a burden on the consignee, because del credere commission is paid, so whenever the del credere commission is paid, this debtor will be responsible, this debtor's responsibility of bad debts will be on the consignee, not the consigner. Whenever he pays del credit commission, the bad debts which is arising from the credit transaction from the debtors will be entitled or responsible for the this one consignee. Okay, consignee does final settlement through check payment, that is bank. So consign prepare the consignment account, consignee account, and abnormal loss account. This is what is the problem. We have to see how we have to solve this. Okay, let us move on to the next one. See, in the beginning stage, what you have to do is you have to find out the value of closing stock. This is the closing stock, and you have to find the value of the closing stock and the abnormal loss. You have already seen the proforma while I was doing the 6 marks problem. You can see the playlist. I will be providing the playlist of all the sessions which are done on consignment accounting in the description box. So there are three columns here, that is particulars, quantity, as well as amount. So in the first thing, what you have to do, you have to say write goods sent on consignment. So what is the goods sent on consignment here? You have sent 1500 units. Whatever the quantity is there, you have to write it in the quantity column. And this amount column, what will happen? 1500 quantity you have sent, but it one costing 5000. Each one is costing what? 5000 rupees. So it is amounting to 75 lakhs. Okay, 75 lakhs is the amount column you need to put. Okay, so next one, whenever you are writing, add non-recurring expenses of the consigner, it is okay. So add non-recurring expense of the consigner. Later what you have to write, freight is a one-time expense. Immediately after the transaction you will be going for this, so hence freight transaction is there. No, so the freight transaction is a non-recurring expenditure. Please write that expenditure as 75,000. Next, insurance is 30,000. Write that expenses also as 30,000. Whenever, because insurance in transit is nothing but a non-recurring expenditure. Okay, so insurance in transit is nothing but a non-recurring expenditure. Hence, you have to add that. Okay, so don't think insurance in go down is nothing but a recurring thing. Whenever you are talking about consignor's expense of insurance, that is relating to insurance in transit. Whenever he wants to transfer the consignment from consignor to consignee, that time this insurance will pay way. Okay, so you have to add the non-recurring expense of the consignor. Whatever the expense the consignor base from for moving the or shifting the goods or consignment from consignor to consignee, then that type of expenditures will be referred as non-recurring expenditure. Okay, so this here 1,05,000 is the expenditure of whatever he has borne. So what you have to do, you should add that. Okay, so you have to add that, then you will be getting this amount, that is 1500. Here nothing to add. Here 1000, 1,05,000 you have to add. So 76 lakh 5,000 is the answer. Okay, so next, this is nothing but cost of goods in transit. This balance is nothing but cost of goods in transit. Later what you have to do? Later, less normal loss in transit. You have to see whether you have a normal loss in the problem. Here I don't have any normal losses, so I will put as nil. So less abnormal loss. They have told that 10 units in transit was lost. Yes or no? So if 10 units are lost in the transit, then it is assumed to be abnormal loss. So how to find out the value? You write 10 units in the quantity column. How to find out the amount for this? So it is nothing but based upon this. Okay. So first write down. First write down 1500. For 1500 quantity, 76 lakh 5,000 is the value. For 10 units, what is the value? So cross multiplication. Whenever you do cross multiplication, you will be getting this answer, like how we have done here. Okay, see this 76 lakh 5,000 into 10 divided by 1500. So you'll be getting the value like this. 50,700. Whenever you find the value like this, you'll be getting 50,700. Okay, so after this you have to write the answer. One second, this is called the cost of goods received. Cost of goods received is nothing but here whatever you have done here, so that is what is the cost of goods received. Okay, cost of goods you received. After that you will be getting this answer, 75,54,300. That is called cost of goods received. If you deduct this, you will be getting this answer. Okay, if you deduct this from this, then you will be getting this answer. Okay, so that is what is the answer. If you deduct this, you will be getting this answer. If you deduct this, you will be getting this answer. Okay, until that no doubts. In the continuation of that, after doing this, what you have to do, you have to do add non-recurring expense of the consignee. Add non-recurring expense of the consignee. So what will happen? Unloading expenditure is there. Okay, so unloading expenditure is there, so you have to take care about that. Unloading expenditure is nothing but whatever the expenditure which is borne by the consignee for unloading the goods from the truck to his godown. So that is 14,900. It is a non-recurring expenditure because after unloading the goods it will not be recurred again, it will not be incurring again and again, hence it should be non-recurring expenditure. But salesman's salary, go down rent, they are all recurring. Monthly they need to pay that, so hence we are not considering that. Okay, so next one is go down goods available for sale. Whenever you add this non-recurring expenses of the consignee, you will be getting this total, that is 1,490 and 75,69,200. Okay, next, less sales. Whatever the sales he has made, you have to less that, that is 1,250. So closing stock will be 2,040. So for this, how to find the value? Upon this you have to find the value. How to find out? For 1,490, for 1,490, 75 lakh 69,200 is the value. So for 240, what is the value? Okay, so you have to cross multiply. Okay, so it is 1,490, so you'll be getting 12,19,200. If you cross multiply, you are getting this answer. So later what you have to do, you have to write this answer. You have to write that answer in the column. That is nothing but the closing stock. This is nothing but the closing stock. That is what we are writing in this. Okay, so this is what is a closing stock. This is the amount which you have to write in the column. Next, in the next, what you have to write is you have to calculate the value of loss transferred to P&L account. Since the insurance company, in this problem, he has taken the insurance. Okay, he has taken the insurance from the insurance company. Hence, what you have to do, you have to just go and write how much is insurance, whatever he has taken, and what is the amount, whether it is an under insurance or over insurance, or it is completely insured, partially insured or completely insured, or it is under insured. We have to see these three conditions, whether it is partly insured, whether it is completely insured, whether it is under insured. Okay, so in this problem, if we see abnormal loss in transit is 50,700, but the claims admitted are amounted to just 45,000. That means it is an under insurance problem. Okay, so how much is under insured? 5,700 is under insured. Whenever this amount is not coming to him, that will be amounting to we have to transfer that loss to his P&L account, because this amount has to be borne by him only. Okay. Okay, so hence we have to transfer that amount to this consignor only. So his P&L account will be always taking this expenses or losses. Okay, hence this amount should be transferred to his P&L account. Next, this is the consignment account. Okay, consignment account, how we have to do? We have to see the pro forma here, how we have to do, and we will move further. In the books of Amco batteries, that is consignor books. Okay, this is the consignment account. Okay, consignment account. So we have to take a particular amount columns. First, what we have to do? We should write two goods sent on consignment. So two goods sent on consignment means what? How much? Already we have seen 15,000, that is 1500 batteries at the cost of 5,000 each. So 75 lakh is the answer for that. Okay. So 75,000 is the answer for that. Since the goods are going outside, it is a real account. Okay, it is a real account. Since the goods are going outside, debit what comes in, credit what goes out. Since the goods are going out, it is nothing but consignment account debtor to goods sent on consignment account. If it is a goods sent on consignment account, then the goods are going outside. Okay, so that is why we are writing consignment account debtor to goods sent on consignment account. Goods sent on consignment account. So what will happen is you have to write 75 lakhs here. Okay, so since the goods are going outside, you have to write debit what comes in, credit what goes out. Goods are going out from the consignee, hence you have to write consignor, hence you have to write goods sent on consignment account. Next, to cash. Here what you have to do? Here we have paid consignor expense like freight and insurance. Whenever the consignment account debtor to cash account or bank account, whatever you write. Okay, so to cash account means the receiver will credit the giver. He is a credit the giver, hence his account should be debited. Okay, so a consignment account debtor to cash account means since that consignor is making the payments, his account should be debited. Debit the receiver alla, credit the giver, hence to cash. Okay, hence this account should be to cash, should be debited. So that amount is nothing but 1,05,000. So next, come this side, come to the credit side, and you have to write what are all the abnormal losses in the transit. Abnormal losses means debit all expenses and losses, credit all incomes and gains. Hence, abnormal loss account in transit debtor to consignment account. Debit all expenses and losses. It is a nominal account. Hence, this should be credited. Debit all expenses and losses, credit all incomes and gains. So this normal loss, that is abnormal loss in transit, is considered to be a loss or nominal account. Okay, so 50,700 is the amount. You have to put the amount there. Next, Manju Electricals account. He has made some sales, right? So how much is the sales? Cash sales is how much? It is nothing but 800 units of this one, 6,500 each. Okay, so that is nothing but 52 lakhs. Okay, so 52 lakhs is the total cash value whatever is going to get out of cash sales. Next, credit sales, 470 units into 7,000 is the amount. 31 lakh 50,000 is the value. So 83 lakh 50,000 is the total sale value. Okay, whatever you are going to get now. So later what you have to do? Later what you have to do is upon this value you are going to get the this one, commission. Okay, commission is nothing but debit all expenses and losses, credit all incomes and gains. Debit all expenses and losses, credit all incomes and gains. Okay, debit all expenses and losses, credit all incomes and gains. It is an expenditure. It has to be paid to Manju Electricals. This person is going to be paid the commission. Okay, so what you have to do? So commission actually is a nominal expenditure. Debit all expenses and losses, credit all incomes and gains. Okay, so this account to electrical account, this account has to be debited. Okay, so how to find out the commission there? Upon the cash sales, upon the total sales, upon total sales, he is given a commission of 5%. Upon the credit sales, he is given a 2%. That is del credere commission has been given. So 8,35,000, 83,50,000 into 5%, that is 4,17,500. Later 31,50,000 you have to take 2% upon that on the credit sales, that is amounting to 63,000. Okay, so next what you are going to study, continuation of that whatever you are going to study now is the continuation of that. So next what you have to do, see here you have already found that upon the total sales it is 5%, upon the credit sales it is 2%, you have to calculate. Okay, next what you have to do, you have to write all the expenses. Okay, okay, so what you have to write, debit the receiver alla credit the giver, debit the receiver alla credit the giver. Hence what you have to write is this Manju Electricals has paid some this one, what is that, Manju Electricals has paid some expenses. So that expenses, this in this it is outgoing of cash for Manju Electricals. So consignment account debtor to Manju Electricals account. Since the cash is going outside, it cannot be debit the receiver, it should be credit the giver. Hence Manju Electricals account should be debited. Okay, so next next one is unloading charges, that is expenditure of him. What is that, is unloading charges, it is 14,900. so 14,900, go down rent is 42,000. so next ads are 6,500, next salary is 30,000, and total of all these will become 93,400. Okay, in the continuation of the problem, the next thing is what you have to do is, see, consignment stock account is there. What do you mean by this consignment stock account? So the closing stock, whatever is lying in the godown, that value of those stocks should be written here. That is 12,19,200. Okay, since it is an asset, debit what comes in. Debit what comes in means from the consignment account it is coming to stock account. So stock is nothing but the real. So hence it is debit what comes in. So you have to write the goods is nothing but the stock, that is the closing stock. Hence you have to write debit what comes in. Hence 12,900 to 12,19,200 should be on the credit side. Okay, next you have to take the total of both the columns now. Whenever you take the total of both the columns, you'll be getting this 96,19,900. Credit side is highest, 96,19,900. So what you have to do, you have to take the balance of that. Okay, so balance of that, please deduct everything on the debit side. You'll be getting 14,41,000 as the balance. So that one is nothing but that one should be transferred to profit and loss account. This one should be transferred to profit and loss account. Okay, so this one should be transferred to profit and loss account, that is 14,41,000 should be transferred to profit and loss account. Next, goods sent on consignment account. What is this goods sent on consignment account? So we have to write goods sent on consignment account because this is an account which has to be prepared in the books of the consignor. Okay, so in this also particulars amount will be there, and by consignment account whatever you have record, see here, whatever you have recorded on the debit side of consignment account should be written on the credit side of the this one, goods sent on consignment account. That's all. Okay, that is what is the thing. You have to write it on the credit side because that was on the debit side of the consignment account. This is 75 lakhs. Okay, so here you'll take the balance of 75 lakhs because credit side is highest. So what we'll do, 75 lakhs you will write, and later here on the debit side nothing is there. So what you will do, you will transfer that amount to trading account. You will transfer that amount to trading account because whatever the goods which is sent by the consignor, it is up to trade or sale. Hence you have to write it out to the trading account. Okay, so next what you have to do, you have to find out the value of this. You have to find out consignee account. We have to find the value which is there in consignee account. So we have to see what are all the things should be done. So same particulars, in the same way you have to do particulars amount, 4 column you have to table you have to take. So whatever has been mentioned in the consignment account regarding this Manju electricals, you have to write it here. What are all that? On the credit side, in the consignment account, on the credit side there is a transaction which is relating to Manju electricals. On the credit side, if it is there on the consignment account, it should be written on the debit side because the consignment account has to be written on the debit side. Okay, so sale here 83 lakhs 50,000 would be the value. Here you should write on the debit side. Manju electricals is doing the sales. Okay, so hence whatever the sales is there, there is an outgoing of goods. Debit what comes in, no, it is not debit what comes in, it is credit what goes out because the goods are going outside. Okay, so next one, by consignment. What are all this? By consignment, what are all the expenditure like non-recurring as well as recurring expenditure of the consignee which is recorded on the debit side of the consignment account. Here it should be on the credit side of the consignment account. Okay, in the consignment account it was on the debit side. Here you should write it on the credit side by consignment account. Okay, so what are the unloading expenditure, go down rent, advertisement as well as sales. Take the total of all the things, you will be getting this amount, that is 93,400. Okay, 93,400. Okay, so in the continuation of that, there is something called commission. There is something called commission in the problem. So what you have to do with that commission, we have to take the commission here. In that they have recorded on the debit side. In the Manju's electricals account, you have to write it on the credit side because commission is an income for him. Debit all the debit the receiver, hence debit the receiver, hence it is nothing but an income to him. So you have to write it here. Okay. So next one, it is 40,000, 4,80,500. Okay, so next one, you have to go and see 4,80,500 is the total of both the 5% as well as 2% whatever the commission is given. So both those things, it was nothing but 4,80,500. So next, everything is done here. So take the total of both the columns. You'll be getting 83 lakh 50,000, 83 lakh 50,000. So whenever you are getting 83 lakh 50,000, then you have to less all the things which is there on the credit side. If you less whatever is there on the credit side, you'll be getting 77 lakh 76,100. So you'll be getting this balance. You have to transfer that to bank. Balancing figure. Okay, that is what is the thing which you have to get in further from the consignor. Okay, this much amount is balance you have to get from the consignor. Okay, so the next one is the abnormal loss account. Whatever he has said in the problem, abnormal loss account, we need to do that. How to do that we will see. Okay, so whatever the abnormal loss which is recorded in the consignment account, you should record it here. Okay, so here on the consignment account, the abnormal loss was recorded on the credit side. Debit all expenses and losses. It was a nominal account. For here, you have to write it as to consignment account. Okay, so to consignment account you have to write. You have to write to consignment account. Okay, so if you write to consignment account, it is 50,700. Okay, so what you have to write here, 50,700 means some amount. Whenever you have taken insurance, up to 45,000 you are claiming the amount you have been given by the insurance company. Okay, so another whatever left out amount, that is the balance of 50,700 is 5,700. So 5,700 is actually transferred to P&L account because it is an under insurance problem. Whatever the under insurance loss which has been arisen because of the average loss, then whatever the loss is there, you have to transfer it to P&L account. Okay, so whatever you have insured, you'll be getting from insurance company. Other than that, you have to transfer that to P&L account. Okay, so this is what is the total problem. Okay, so this is what is the total problem. I hope you have understood everything. Okay, there is no doubt in this, I believe. This is the end of the session, guys. Thank you so much for watching this video. It was, I hope it was very educative and informative, and you have got cleared so many doubts whatever was in your mind. Okay, so this is the end of the session. So please do subscribe to our channel right now and press the bell icon, whichever hit the bell icon, so that you will be getting a regular notification as soon as the video is uploaded. Please do like the video and share it to those friends who are very in need of this session. Thank you. Have a nice day. God bless you all.